Matt Hall, Armadillo. Just a brief video summary of the key announcements in today's 2023 spring statement. Did it contain any surprises? If so, what were they? And what impact will it have on businesses and taxpayers across the UK? Well, I think the first thing that jumps out, certainly to me, is that those who were hoping for the Chancellor's budget today to row back on, repeal the pre-announced and planned increase in corporation tax rates to 25% from the 1st of April have been left disappointed. However, there are a couple of headline changes that I think will have surprised, at least ahead of the leaks to the press in the first part of this week, would have surprised commentators, tax professionals, and in particular pension savers alike. The Chancellor appears to have positioned today's statement as a back-to-work budget, and chief amongst the initiatives intended to encourage what we might politely term the more mature workers, probably particularly those still within the NHS, to remain in work or indeed to return to work and to drive economic growth across the UK, is a surprise increase in the annual allowance for pension contributions for individuals from £40,000 to £60,000. And indeed, the announcement that the pensions lifetime allowance will be abolished from 2024. So the immediate announcements with effect from the 6th of April is the increases, as we've said, in the annual allowance to £60,000 and an increase in the tapered annual allowance to £10,000, with the lifetime allowance being abolished next year. I think that will come as a significant surprise to many. No doubt, perhaps will be criticised as rewarding the more mature, perhaps better off taxpayers. However, I think in certain sectors where there's been a brain drain or departures of more senior staff, say particularly in the NHS, I think it will be broadly and widely welcomed in those sectors at least. There is something in today's announcements for those with perhaps at the opposite end of their careers, those with young children, with an increase in the amount of the universal credit that parents can claim for childcare and providing more free childcare hours for those with young children. There is also help for today announced for those who engaged as carers. So the income threshold at which qualifying carers will begin to pay income tax on care income is increased significantly to £18,140 a year. And those levels are now going to be index linked moving forwards. Despite disappointing those, certainly within his own party, who had called for the Chancellor to repeal the very imminent increase in corporation tax rates, there is something in there for those of us acting for corporate clients and for businesses around the UK, with the Chancellor announcing effectively what he's described as a full expensing tax relief for the next 3 years to replace the outgoing super deduction scheme. And this will effectively allow businesses to claim tax relief of 20 pence for every pound spent on plant and machinery. The full expensing relief will apply on qualifying expenditure incurred on the provision of new plant and machinery on or after the 1st of April this year, but spent before the 1st of April 2026. So it's a 3-year window effectively for 100% first-year allowances for main rate expenditure and 50% allowance for special rate expenditure. There's also been some changes announced to the R&D tax credit reliefs, with an increased rate for relief for loss-making R&D intensive SMEs in particular, with eligible companies receiving £27 from HMRC for every £100 of R&D investment. R&D intensive companies are those where the qualifying R&D expenditure was 40% or more of its total expenditure. There's also a number of changes announced for cultural and creative tax reliefs for theatre, orchestra, museums, galleries, and new tax credits for the audio, visual, and video game sectors. But perhaps more applicable to the ordinary man and woman is that the pre-announced or planned 11% increase in the fuel duties has been scrapped. So the fuel duty will remain for the next 12 months as it is now. As ever, when the Chancellor steps up to make budget announcements, there are the usual announcements regarding measures to tackle tax avoidance. This year, they include a further £47.2 million investment to support HMRC, its capability to collect tax debts. No doubt those within debt management and banking within HMRC will spend that wisely. There will be legislation introduced which will close an avoidance scheme planning, which involved unconditional contracts and which effectively sought to leave HMRC out of time to assess capital gains tax due. There are going to be changes which affect what used to be the use of sort of bearer instruments when shares were sold to non-UK corporates. There will be a change from 2024-25 to the self-assessment tax return forms, which will require amounts that represent crypto assets to be identified separately. And perhaps something that will get a bit of media coverage, but I remain sceptical as to why HMRC might think they need these powers. The government has announced that it will consult on the introduction of a new criminal offence for promoters of tax avoidance schemes who fail to comply with a legal notice from HMRC to stop promoting a particular scheme. I think we can speculate that that's primarily focused on the continued proliferation of what HMRC termed disguised remuneration schemes in the contractor sector, with remarkably schemes still widely available, often, indeed, in certainly the cases that I've seen, with absolutely zero prospects of succeeding. I would have thought and expected that the promoters of those types of arrangements could be prosecuted perfectly well under the existing laws, but nevertheless, there is a consultation paper which will come where the promoters of those schemes effectively fail to cease and desist when told to do so by HMRC. And the government have said, no doubt in anticipation of the outcome of that consultation being predetermined, the government will double the maximum sentences for the most egregious forms of tax fraud from 7 to 14 years. And finally, as if to prove that charity not only begins but also ends at home, the Chancellor announced today that he will legislate in the spring finance bill that he will restrict UK charity tax reliefs and exemptions to UK charities and community amateur sports clubs only. This change will come into effect from today and will apply UK-wide. Non-UK charities and community amateur sports clubs that HMRC has accepted qualify for charity tax reliefs will have a transitional period until 2024. Some might think that the UK is becoming ever more inward-looking. For those who want something to look forward to, the 2023 Finance Bill setting out these announcements and others that I haven't covered here today will be published on the 23rd of March, 8 days' time. I'm sure it will be an absolute page turner, and I will post a link with the updates to this video for our members so that they can access all of today's announcements, and hope you found this a useful summary of today's spring budget.